This is a lecture from Open Tuition. For the free lecture notes that go with this podcast, please visit opentuition.com.
Well, at the end of our previous session together, we'd been introduced to how to determine the basis of assessment for the unincorporated trader during the most difficult period at all that we ever have to deal with. That's the opening years of a new unincorporated trade. Now, to begin with, we saw that the rules were, and I hope you recall, quite straightforward. And that was that in that first year, you would use an actual basis of assessment, simply looking at what profit was actually made from the date you started to trade through to the following 5th of April. That would inevitably involve some sort of apportionment, and our apportionments would be simply done to the nearest month there. We also saw that usually by year 3, but as we'll discover in this session, not always, but usually by year 3, we're able to adopt a current year basis. So year 1 was actual, start date through to the following 5th of April. CYB in the third year, normally in the third year, the accounting year ended in that tax year, which gave us your main problem, the second year. And what we'd explored was the questions that need to be asked and indeed then answered to allow us to determine the relevant basis of assessment to apply. So in that second year, what was the first question? That first question, do we have any accounting period whatsoever? Whether short, long or 12 months, do we have any accounting period ended in that second tax year? Now the answer to that, as we've seen so far, was yes. So then we had to answer the next question, how long was that period? If you were very, very lucky indeed, you might find the situation where the accounting period was exactly 12 months. And if it's exactly 12 months, i.e. a year end, then current year basis could be used from the second year. But one has to think in most exam questions, that's an unlikely prospect. So what we're more likely to find is that, yeah, we do have an accounting period ended, but it's either a short period, one of less than 12 months, or it's a long period, very obviously one of more than 12 months. It was this option, the short period ended in that second tax year, that we then explored with an example, and I trust again an example that you have prepared and done at home and reviewed through the answer there too. But if you have a short period, one of less than 12 months, ended in that second tax year, then we know that from this tax year onwards we'll always be assessing 12 months worth of profit. The only question is which 12 months? And the answer was the first 12 months. We would assess the profits of the first 12 months of trading. So what did that mean? Well, if you have that short period, the opening short period ended in that second tax year, you will pick up all of that short period, whether it's 6 months, 8 months, 9 months, 10 months, whatever there, obviously less than 12, and you'll add to it however many months you need from the second accounting period to build it up to a 12-month figure of profit. So all your short opening period plus however many months you need from the second period to make it up to 12 months. What we would then be able to do, moving on to the third year, as we saw, is to use CYB. Now, what would inevitably happen there, presuming that you had not chosen the 31st of March or 5th of April as your accounting date, we'd have what we call overlaps. So some profits, as we saw, would fall into more than one basis period within the opening years. Those profits are known as overlap profits. Now, those overlap profits will then give rise to overlap relief being available eventually, as we'll see later, not in this session and in our next lecture together, on cessation of trading, allowing the overlap profit to be deducted in that final tax year of assessment. The end result will be that from the start date to the cessation date, every pound of profit will end up having been assessed once. So in the opening years, we're going to find that overlap profits will arise if the accounting date is anything other than 31st of March stroke 5th of April there, given that we do monthly apportionments. Other than that, we will have overlap profits, which we may or may not be required to determine. And we may also be required to state what happens to them. Easy, they're deducted in deriving the assessment in the final tax year of trading. But these rules now need to be learnt. So we've gone down one side here of this exercise. Do we have an accounting period ended in the second year? Yes, we do. How long is that period? Well, it is of 12 months or less, and that meant that we assessed the first 12 months of trading. So what happens now if, we do have an accounting period that ends in that second tax year, but this time that period is more than 12 months? In which case, which 12 months do you use then? And the answer here for you now to learn, we assess the profits for the 12 months to the accounting period end date, ending in that second year, i.e. that is the last 12 months of that long opening period. It's the last 12 months of that long opening period. Whether it's 14, 15, 16, 18 months, whatever it might be, we will take the profits for the 12 months to that accounting period end date, i.e. the last 12 months of the opening period. Now again, it's important for us to know when we take 12 months, which 12, otherwise we may not be able to determine what overlaps, if any, have arisen during those opening years, and that is something we need to know. Otherwise, we will eventually not be able to determine the correct assessment in the final tax year. So it's something that we need to be able to deal with. Right, what we need therefore is a little example illustrating this new scenario. And as luck would have it, here we have one ready prepared for you. So if you want to copy out that information now, we're told that our trader commenced trading, again, like with the example I gave to you last time, on the 1st of January 15. Now remember what we do as we read this information in the question. The first thing that we do, pick up your start date here and you write next to that which tax year you started trading in. So you know which is the first tax year of assessment. And as I hope we recall, 1st of January 15 falls in the 14-15 tax year, so you now know your first year. We're then told that we first prepared accounts to the 31st of March, but to the 31st of March 16. So rather than going with a very short period from 1st of Jan 15 to 31st of March 15, we've decided to run a long opening period. And it's quite sensible. If you just started trading, you're 3 months into the business, the last thing you want to do is to start preparing accounts and have all the problems of that. You're trying to get a business going here. So it would be a logical move, therefore, to say, no, I won't prepare accounts for the opening 3 months. I do want to choose 31st of March, but I'll go to the 31st of March 16. So that would leave you with an opening period of some 50 months. And that period here of 15 months to the 31st of March 16 has given rise to a tax-adjusted trading profit of 45,000. Now remember again where that number will have come from. It is a tax-adjusted trading profit. You've dealt with Chapter 4 adjustment of profits, you've dealt with Chapter 5 capital allowances, you've computed and deducted them, and you've got a tax-adjusted trading profit. That for the period to March 16 is 45,000. Let's say that we're projecting that the tax-adjusted profit for the year ended March 17 is then going to be 60,000. And with that information, we then need to determine the assessments. Now again, remember another exercise I suggested you do when first reading the question and what you can write down on your question page. The first thing we did, as we have already denoted up here, we checked out the start date and that told us what was our first tax year. Can you remember what the next thing that we did was? Well, the next thing was to look for the first full year end that you've got. Because only when you have a year end can you then use CYB. So the year ended 31st of March 17, using current year basis. So when will that accounting period be assessed in using CYB? Year ended 31st of March 17, that date 31st of March 17 ends in which tax year? And I really hope that you are telling yourself here that that is indeed the 16-17 tax year. So we know then we can use CYB, and we also know what that profit will be. It will be £60,000. We also know that 14-15 up here is our first tax year, and we can now proceed to establish these assessments. Now remember the information that we put down. We state the tax year to begin with, starting with our first tax year, 1415. We don't want to see first year, second year, third year written. We want to know what these tax years are. So our first tax year is 1415. What do we write next to that? Again, I hope you have already written it in. You write in the basis of assessment, which, as we know, in the first year is always actual. We then state what does that give us as our basis period. Actual means from the start date, 1st of January 15, through to the following 5th of April. That will be the 5th of April 15. And is the 5th of April 15 the end of the 1415 tax year? Yes, it is. So we know we've correctly determined that first tax year. How many months is that? Well, that, of course, is 3 months, drawn this time from an opening period of some 15 months. And in that 15-month period to March 16, we made £45,000 of profit. 3/15 of 45,000 will therefore give us, and hopefully we determine that, to be a £9,000 assessment. So there we go, first tax year done and dusted. Should not be a problem. Based on the start date, you've got the tax year. Basis of assessment is always actual. What does that mean? Whatever your start date may be, through to the following 5th of April. How many months is that? Here 3 months. And from what length of opening period is that drawn? Here 15 months. 3/15 of 45,000, £9,000. Now you might think that all you need to do is to put that in and that in. Wrong. You have to show all this information. What is the basis of assessment? What is the basis period? What is the calculation? And apart from anything else, for one very good reason. In this example, I gave you, and in the previous example, I gave you the tax-adjusted trading profit. That might not happen. What you might be given in an examination question is the statement of profit or loss for that first opening period of 15 months to the 31st of March 16. You're given the statement of profit or loss and a whole series of notes, again explaining then certain of the items within that particular statement of profit or loss. And what do you have to do? What you did in chapter 4, adjust up that statement of profit or loss, get an adjusted trading profit. What do you then also have to do? You have to compute and deduct the available capital allowances there. So you may have to have computed that figure of 45,000. They may then tell you that the projected tax-adjusted trading profit for the next accounting period was, as here given, the £60,000. But you've got to work out that first figure. There is absolutely no certainty at all in the exam that you will have correctly done every adjustment of profit item, I say correctly, or indeed computed and deducted the correct figure of capital allowances. So it's perfectly possible that that figure there that you are working with is not actually the answer as per the model answer. But you need not worry. If you missed an adjustment of profit, an item in the capital allowances computation, you lost a half a mark or a mark within those parts of the question. But as long as you now show what you have done with your number, you've said, there's the tax year, there's the basis of assessment, here's the basis period, and here is my calculation. It's very easy for the examiner to go, right, 1415, correct. Basis of assessment, actual, correct. Basis period, 1st of Jan to 5th of April, correct. What does that mean? It's 3/15 of, well, you've got 45,000, maybe the answer should have been 48,000 or whatever. So you will now get all the marks in terms of the assessments. But if all you've done is to show a tax year and an assessment, are you expecting the examiner to get, or the marker, to get his or her calculator out and try to prove your figure from your earlier calculations? Well, no. If you can't be bothered to help yourself, why should they do it for you? So, I can only suggest here most positively, help yourself. Make life easier for the marker and therefore get the marks. Okay, so 1415, we've got our assessment. £9,000. We know that in 1617 it will be current year basis, and that will be easy. That will be the profits of the accounting year ended the 31st of March 17. It's a £60,000 profit. But our problem year, as ever, is the second tax year, for us 1516. So the technique again, remember. Question: do we have any accounting period ended in the 1516 tax year? Look at what we've got. Our opening period ended on the 31st of March 16. Does that end in the 1516 tax year? Yes, it does. So in 1516, we do have an accounting period that ends in the tax year. Next question, how long is that period? It is not a year end, therefore no CYB, and it's not a short period, it's a long period. So we've got a long period, one of 15 months indeed, ended on the 31st of March 16. So what was the basis of assessment that we used? Look back at the notes there that tell you we're going to take the last 12 months of that long opening period, i.e. the 12 months through to what was the accounting period end date, 31st of March, ended in that tax year. That was the 31st of March 16. So what period will that be as a basis period? That, well, through to the 31st of March 16, we want 12 months, so that would have run from the 1st of April there of 15 through to the 31st of March 16. Now, of course, we are taking 12 months of profit out of the long opening period of 15 months worth of profit. So whichever dates we put in, we were always going to write 12/15 of 45,000. But it is important for you to know which 12 months that is, not the least, so that we may then be able to determine what, if any, is the amount of overlap profit that has arisen. But for us now, 12/15 of 45,000 will be, what's that, £36,000 as our assessment. £36,000. Second year, your problem year now done. On to something that we already know the answer to, 1617, our third tax year. Now we do have a current year basis available to us. What is our basis period? It is the accounting year ended the 31st of March 17, and the tax adjusted trading profit given in the question, £60,000. We're there. We have overcome the problem of the opening year's bases of assessments. We've got on to CYB, and we'll stay with CYB all the way through until when we get to the final tax year. Okay, have a look at again through the exercise that we've just done. Relate it back to your notes about the bases of assessment over those first 3 tax years there. Make sure you're happy with it. Not just indeed in terms of the technical side of it, the application of the rules, but also how we presented that information here on our answer page in the exam. I'd also like you then to consider, as we must in opening years, what, if any, is the overlap profit. So again, if you just pause this at this point in time, check through, make sure you're happy with all that we've done, and determine what do you think is the overlap profit. Remember, we do our apportionments, our calculations, to the nearest month. Okay, well hopefully therefore we have now determined that in fact there are no overlap profits that have arisen here. It is the point in case, we mentioned this in our introduction, that if you've chosen the 31st of March stroke 5th of April as your accounting date, then there will be no overlap profits. Look at what's happened. In the first tax year, 1415, you've used the first 3 months of your opening 15-month period. In the second tax year, 1516, you've used the last 12 months. Now, the overlap is a few days there, the first 5 days of April 15, but we do our calculations to the nearest month, so there is no overlap. First 3 months assessed in the first tax year the last 12 months of that 15-month period assessed in 15-16. Then in 16-17 we moved on to our new unique basis period using CYB, the year ended 31st of March 17. So as we see there are no overlaps that have arisen. There are no overlap profits, therefore, that has arisen. And we've now established our CYB basis, and we can continue to work on that basis. Now again, check through, make sure you're happy with that. And what I'd then like you to do at this point in time, stall the lecture at this point, and then you work example 3 and look through and review the answer to example 3, making sure you're happy with that. Once you are, then rejoin us again for the next part of this lecture, where we'll finish off all the different possibilities, because in fact there is still one more possibility of what you might encounter in those opening years of your new trade. Okay, well, back to our note on the bases of assessment, therefore, that apply in those opening years. Now, as we know, the first year is always actual. It's the second year that gives rise to the problems that the examiner can set for us. How do we overcome that problem? That first question. Is there an accounting period which ends in that second tax year? Up until now, the answer to that question has always been yes. The only question over that accounting period that ended in that tax year was how long was it? And basically there were 3 options. It could have been exactly 12 months, a year end. And if you had a year end, then you would be immediately able to use CYB. But if it's not, as it probably won't be a year end, then it's going to be either a short period, less than 12 months long, or a long period, more than 12 months. So based on the fact that either it's a short or a long period, we could determine which particular 12 months of profit were then going to be assessed. Was it going to be the first 12 months, where we had a short opening period ended in that year, so we pick up the short opening period and add to it however many months needed to build it up to a 12-month period? Or do we have a long period ended in that second tax year, obviously more than 12 months of profit? We will only take 12, and it's the last 12 of those months that we take, the 12 months to the accounting period end date ended in that year. And that would then allow us by year 3 to always be able to use CYB. Well, now we come to the last of the scenarios that we may have to deal with in any exam question. We're back with that original question. Do we have an accounting period ended in the second tax year? The answer is no. And it will obviously have to be a long opening period that we have now started our trading with. We have a long opening period, but we traded through the first tax year, through the second tax year, and not had an accounting period ended until the third tax year. So do we have an accounting period ended in the second tax year? No. So again, the question is, which 12 months of profit will be assessed in this tax year? The answer, the actual profits. We use an actual basis of assessment in that second year, i.e. the profits from the 6th of April to the following 5th of April. So we use an actual basis in the first year, start date to 5th of April, actual basis in the second year, 6th of April to 5th of April. Now, inevitably what that will be, you'll be taking 12 months out of a long opening period times the opening profit of that long opening period. That's what you'll be doing. The only question is, how long was that opening period? But the 12 months you take are the actual 12 months of the tax year, 6th of April to 5th of April. Now again, it may seem pedantic. You're going to take 12 months of profit. If it's from, say, an 18-month period, you will take 12/18ths of that profit. What does it matter which 12 months? Well, it matters, as we saw in the previous problem, to be able then to correctly determine any overlap profits based on any overlap period. So we need to know. Now, what that means is we then face a further problem. That it means that that first opening accounting period does not end in the first nor in the second tax year. It ends in the third tax year. So that's going to be a long period. It will therefore mean that we do not have the usual CYB assessment applicable in that third year. But notice the way in which we used, the worded here, the basis of assessment in the third year. We assess the profits for the 12 months to the accounting period end date, ending in that year 3. Ending in that year 3. Now those are the same words as we used up there, where we had a long opening period, but one that ended in the second tax year. Now we have a long opening period, but one that ends in the third year. We still take the last 12 months of that long opening period. It's the next best thing that we can get to CYB, but it isn't CYB. It would mean that, as we mentioned in our first lecture, it may, and this is the situation, it may be the fourth tax year before actually you can operate on your normal CYB system. Okay. The only way, of course, to get to grips with this is by the use of a little example. So what I'd like you to do, again, is get your notes ready. Bingo, there we go. Here's one that we prepared earlier for you. Now, if you look at the start date, you'll see a similarity. Indeed, it is the exact same start date as I gave you before. In the previous example, we started to trade on the 1st of January 15, but then we prepared accounts to the 31st of March 16. Now that meant that we had a long opening period, but it ended in what proved to be the second tax year. What we're now doing is prepare accounts to the 30th of April 16. Now let's see what difference that gives rise to here. So remember the technique. Now, we've done this 2 times before, so what was the start date? The 1st of January 15. If you get this one wrong now, I feel that there is little hope. That, of course, has always been and continues to be a start date falling in what is our first tax year, 14-15. So there is our first year. When can we firstly use CYB? There's your first full proper year end, 30th of April 17, CYB. So when now will that £60,000 profit for the accounting year ended 30th of April 17, when will that be assessed? Well, that 30th of April 17 date falls in the 17-18 tax year. So it means from 14-15, the first year, we've got 15-16 and 16-17, the second and third years to deal with before we can start to operate using CYB. So let's go through the technique. Starting point, the first tax year. Now, you therefore write out what will be the assessment in that first year. We've done it already twice over, so we know the basis of assessment, you know the basis period, you know that in that opening period you have got 3 months within the tax year. The only question is 3 months out of how many months of profit. Work the assessment for me, please. So pause this for a moment and then you show the assessment. So what have we got? 14-15 actual. What do we mean by actual? Start date 1st of January through to the following 5th of April. How many months is it? As we just stated, it is 3 months. 3 months, however, this time drawn from an opening period of 16 months, in which we made £48,000. And 3/16 of 48, that is going to give us £9,000. Now, if that looks familiar to the answer that we got for the assessment in the first tax year in the previous problem, it is meant to. What I've done here is to give you an alternate accounting period end date of the 30th of April 2016 that the taxpayer, with your advice, may have chosen to use, rather than the previous example, the 31st of March. So all it was that in the previous example, we started with a 15-month period. Now we've started with a 16-month period. But I've kept the level of profit basically at the same levels. You may recall that the opening 15 months of profit in the previous example, look back to the numbers that we had, that was a £45,000 level of profit. And that meant that 45,000 in 15 months, we were basically making profit at an average of 3,000 a month. I've maintained that now. I've added on an extra month. It's now a 16-month period to April 16, but I put on another 3,000, giving us 48. So 3/16 of 48 is £9,000. Now, we then moved on to the next period, and we've got 60,000, just like we had in the previous example. Now, the reason why I've done this is that we will then have the basis for a decision that will need to be made that your client is unaware of, that you, the accountant, is there to advise in respect of. And that advice is in regards a choice of accounting date. And here you have the classic choice question. Do we prepare our accounts to 31st of March, or do we go through to the 30th of April? Now again, the same outcomes would be if it was a choice between using the 5th of April or the 6th of April. The 5th of April is the end of one tax year, the 6th of April is the start of another tax year. So it's all down to your chosen accounting period end date. Now, we'll come back to that at the end of this exercise, and that's a more planning issue, it's a more skills-based issue, that again the examiner would reasonably expect you to be able to give simple advice to your client in respect of. But at this point, let's look at the mechanics of the exercise. Let's see how it is that we work out the assessments for these opening years, given these profits, given the choice of accounting date that has been made, that being the 30th of April. So to repeat, 14-15 we determined is the first year, actual basis, 1st of Jan to 5th of April 15, still 3 months, this though out of a 16-month period in which we made 48,000 and therefore £9,000 assessment. On to, as we've always known it to be the most difficult of the years to deal with, the second year, which here then must be 15-16. Right, question. Do we have an accounting period ended in the 15-16 tax year? Well, you answer that. You can see there where your first accounting period was prepared to the 30th of April 16. Does the 30th of April 16 fall in the 15-16 tax year? I don't think so. No. The 15-16 tax year ended on the 5th of April 16, and on that basis, therefore, we don't have any accounting period ended in that second year. That 30th of April 16 date, that first accounting period end date you have, well, that ends in 16-17, our third tax year. So what do we do? Look back at your note there. In the second tax year, do we have an accounting period ended? No, we don't. So what basis of assessment do we use? Actual. So, work the assessment for me there, please, and of course state the basis period. So if you could put that information in, again, pause this for a moment while you do that, and then come back and we'll see whether we've got the right outcome, which I seriously hope we will have done. Okay, so the basis period in 15-16 on our actual basis of assessment, 6th of April, 15, through to the following 5th of April 16 there. Now that, as we know, is 12 months. And it is drawn entirely from your long opening period of 16 months, in which we made £48,000. 12/16 of 48, making profit, we said, at a rate of £3,000 a month, therefore £36,000 of assessment. A quick check at this point. Do we as yet have any overlaps? Answer, no. The first tax year is actual. The second tax year is actual. There is no overlap. What we've done there is to take of the opening 16-month period, the first 3 months in 14-15 and the next 12 months in 15-16 there. So there is no overlap. So let's move on to our third year, 16-17, which previous to this example, our problems were over and we were able to use CYB. Not now. Question, do we have an accounting period ended in 16-17? Well, we know, of course, that the answer to that is yes. And we use the same technique as we did before. If you have a long opening period ended in that tax year, which 12 months do you take? You take the last 12 months of that long opening period. Therefore, the 12 months through to the accounting date, 30th of April, ended in that tax year. That is the 30th of April 16 there. What is that basis period? Well, we're going 12 months to 30th of April 16, so that would have begun on the 1st of May there, and that would be the 1st of May 15 through to the 30th of April 16. Now again, that is 12 months out of your long opening period of 16 months. So whichever 12 you were taking, like in 15/16's assessment, it's still 12/16 of £48,000, and that will still give you £36,000 there. So we now are able to deal with absolutely any possible outcome that the examiner could set us as regards our start date and choice of accounting date. We now know what bases of assessment will apply. Here, when we come to the tricky second year, pose the question, do we have any accounting period ended in that second tax year? The answer, as we saw, was no, we don't. No problem. We use an actual basis of assessment here in 15/16. 6th of April to 5th of April. Moving on to the third year, now of course we do have that accounting period ended. It is a long period, here a 16-month period, and we take the last 12 of those 16 months and work the assessment. Now again, having done so, we then check out for any overlaps. Do we now have any overlap? Oh, we most certainly do. In the second tax year, we had 12 months to the 5th of April 16, again on a monthly apportionment. That's the same as being the end of March 16. 16/17, we have got 12 months to 30th of April 16. So we've only gone forward one more month. So our overlap profits there are going to be some 11 months worth of profit. Now, we'll show that calculation in just a moment's time. But let's just complete this exercise in terms of the assessments. By 17/18, at last, CYB. Which accounting year ended the 30th of April is that? Well, it's the first accounting year ended the 30th of April that we have, and that is 2017. And that profit was £60,000. Right. I'd like you now to establish the level of overlap profit. We've seen the basis of it. The second tax year took you to the 5th of April. The third tax year took you to the 30th of April, both cases 2016. We've got 11 months worth of overlap. Again, pause this and establish for me, please, those overlap profits. So, what overlap profits do we have? We've seen that we've got 11 months worth of overlap, so 11/12 of 36,000 being what was assessed there in those 2 years. The other way of looking at it is that it's 11 months out of 16 months in which we made £48,000. Either way, we are talking about £33,000 of overlap profit that has arisen. £33,000 of overlap profit. Basically, this choice between the two accounting dates that we've got in these last two examples, 31st of March or 30th of April. With 31st of March, no overlap profits. With 30th of April, then on a monthly apportionment anyway, that's going to be the maximum amount of overlap you could see. Here, some 11 months worth of overlap. Again, given that we prepare accounts to the end of a month. 11 months worth of overlap. What happens to that overlap profit? Well, as ever, as we know, we're going to note that at this stage, and then when we get to the final tax year, it will be deducted from what would otherwise have been the assessment in the final tax year. There it's known as overlap relief, reducing the assessment for the final tax year. Okay, I'd like you therefore to have a little look through, make sure that you are happy with the exercise that we've done here. So pause at this particular point in time and then come back and we'll have a little look at that skills issue, that choice of accounting date. And before you do come back to this, I'd like you to think now, look back at the last two sets of answers and advise which accounting date would you be recommending to your client to use here based on the profits and the assessments we've seen in the opening years. Would you choose 31st of March as in the previous example, or would you choose the 30th of April there? Over to you. Okay, so hopefully we can do the mechanics of it, working out the assessments in each of the relevant tax years from the first tax year, where we always use actual, through to the first year in which we will be able then to use CYB. It could be as early as the second year, it usually is something like the third year, though in that previous example we saw it could be as late as the fourth tax year before a valid CYB is available to you. But left you with probably the most interesting and the skills-based part of this exercise, and that is, given the profits and the accounting period suggested in the previous two examples, i.e. to 31st of March as the accounting date or to 30th of April, which of those two dates would you choose and why? Now then, let's see whether we can figure this out. Now, obviously you've got a 50-50 chance. It's one or the other. It's either 31st of March or 30th of April. Let me put you out of your miseries right from the very beginning by telling you you should have chosen the 30th of April. Now, that might come as a surprise to many of you, those of you who thought, of course, it was going to be the 31st of March. The usual reason why students think that it's the 31st of March is because with the 31st of March, there are no overlap profits, whereas with the 30th of April, we've got a very substantial overlap profit. And somehow we think that overlap profits are bad. Well, I will suggest to you that they are not necessarily bad, in inverted commas. They are a fact of life, a fact from the given choice of accounting date that you have made, but they may serve you well indeed, and do serve you well in this particular exercise. So let's look at the assessments. Now you need to have open there in front of you the answers to both of the exercises, the one that we see here where we chose 30th of April and the previous one where we chose 31st of March. And let's go through those assessments. Right, in 1415 we will assess £9,000. Look back to your 31st of March accounting date, and then in 1415, what again was the assessment? It was £9,000. So there's no difference. In 1415, whichever accounting date we have chosen, we are assessed on £9,000. In the second tax year, here we've assessed £36,000. Look back to what happened when you chose 31st of March, and again you will see the answer. It was £36,000. Let's just at this point roll back and have a look at what we had there. This was where we were using March. There we go. There's our £9,000 and £36,000 respectively there. But look at what happened in, and this is the critical year, the third year, 1617. If we had chosen March date, then the year ended March 17 would be assessed, and that was the £60,000 profit. Whereas, had we chosen the 30th of April, and now you'll see why we should choose the 30th of April, what we did was to again use the opening period of profit for one more time as the basis of assessment in the 1617 year. And look what happens. We've got, again, 36,000. It's not until 1718 that the £60,000 comes up for assessment. So in that third year, if you'd chosen 30th of April, your assessment was 36,000. If you'd chosen 31st of March, your assessment was 60,000. A difference of £24,000 there. An extra £24,000 of profit being assessed in that second tax year. Now then, that would mean, here obviously we don't know what other income, if any, the taxpayer has, but it's quite possible, nay probable, that some, if not all of that profit might, that's the £60,000 that you have there, some of it of course would be assessed in the higher rate, whereas with the £36,000 some of that may be still in higher rate but otherwise in basic rate band. So it's possible that the £24,000 difference is income that would all have been taxed in the higher rate band. Now, again, until you know the information about other income, you cannot make correctly that statement. But let's presume that that was the case. Now, that would mean 24,000 at 40%. That's an extra 24,000 on, what did I say, 24,000 at 40% would be 9,600. And although we don't yet know how to do it, there'd be some additional Class 4 national insurance contributions as well to pay, because those two will be based on the level of profits made by the business. But more of that in a later chapter. The point is that you could be looking at additional tax costs in 16-17 of up to £10,000, near enough £10,000 possible extra tax if you had chosen to use the 31st of March rather than the 30th of April. And here the overlap, the extended overlap, has done you good, because in 16-17 we've been able to use that opening period of profit of 48,000 for one more assessment. We used it in the first year, we used it in the second year, and now we can use it again in the third year. And where we made 48,000 in 16 months, or in the previous example 45,000 in 15 months, we were making profit on average at a level of £3,000 a month. Whereas in the next accounting period, our first full year end, we made £60,000 of profit, which for a 12-month period meant that we were making profits basically at an average rate of £5,000 a month. So the point here is that profits rose from the first accounting period to the second period, not comparing 48 to 60, but comparing on a monthly basis. Average profits in the first period were 3,000 a month, average profits in the second period 5,000 a month there. So that meant that if we could, as we could here in 16-17, use the opening period of profit again rather than the new period of profit, we were able to use that lower figure of profit as the basis of assessment for one more year. So the basic rule of thumb is simple. If profits on average are rising over the opening years, and you'd suspect that that's quite a usual circumstance, you become established in your first period, you grow then hopefully from the second period onwards. That if profits are rising over those opening years, if it's a choice between 31st of March or 30th of April, choose the 30th of April. That allows you to use the older profits for a longer period of time. Older profits are smaller profits and therefore equal smaller assessments. The critical here, 36,000 in the third year rather than 60. And that advantage would continue if after this the next accounting period the profit had been 70,000. Then in 17-18 it was 60,000 here. In 17-18, if you'd chosen March, it would be 70,000 or whatever figure of profit it would be. So while the profits continue to grow, the choice of 30th of April is a wise decision indeed. If on the other hand, as the examiner could set it, you had a large opening period of profit, you hit the market well, and you were able to make big profits in the opening accounting period, and then maybe the profits fell away in the second and third period, then if profits in the opening period were higher on average than in the second period, you would not wish to have 3 years based on those bigger profits. You'd only want 2 years based on the bigger profits. So in that case, you choose the 31st of March. So if profits are rising, choose 30th of April. If profits are falling from the opening period, choose 31st of March. So, should you get that more skills-based question, you now have a basis of answering it. What you now need to do before you move to the next lecture, go back over all the examples that we have seen and do make sure you've reviewed through again the ones in the book there. I've left those for you to do, for you to have a go at. Make sure you've done that. Make sure you're happy with those bases of assessment. I need you to be familiar at least with the use of those different bases of assessment, what they mean. Whether at this stage, depending on how close you are to exam date at this point, whether you try to learn them, as it were, hopefully you will do that in the near future, but at some point, you do have to bite the bullet and you do have to learn those bases of assessment. So maybe closer to exam date is when you must absolutely learn those bases of assessment. It's a very common area of questioning. Opening years always give problems to students, and on that basis it is regularly tested. And of course, with objective testing now, they're able basically to put it into just about every exam if they so choose. They don't have to model a complete question around it, though they could, either in section B or in section C. It could just be a one-off. Work out the assessment here in a particular tax year, and you see that you're dealing with a new business that has just started to trade. So learn those rules you must. But firstly, make sure that you're happy with your understanding of the mechanics of how those rules apply. Then at a later point, maybe closer to exam date, you must learn. Well, that concludes this particular session, and we're now able to deal with opening years, whatever start date or accounting date we may have chosen. You'll be very relieved to hear that in the next session, when we deal with the bases of assessment in closing years, it's an altogether easier scenario, much easier. There is one set technique. It comes in 3 very basic steps. You follow them and you establish your assessments in the closing years. It's a much easier situation, so don't worry. Don't think we're going to have another couple of lectures just dealing with closing years. We'll be able to deal with it very quickly and I hope very easily. So we look forward to discussing those rules and other rules here in Chapter 6 in our next session together.